What's really happening is that in 5 years' time, certainly in outside of the States, and I guess it's going to happen in the States as well, but you're going to be required to produce one report, which will be an integrated report with both the financial data and the non-financial data all in one place. Got to be able to relate financial performance with sustainability performance. This is one, in fact, this is one of those subliminal drivers to the explosion in ESG, because this particular phenomenon has been understood for some considerable time now by the big funds in particular. If most of the assets that comprise the total value of the entity, the organization, are intangible, but chief CFOs typically can only count the tangibles, parameterize the tangibles, either they're out of a job or the organization's in trouble. The global leaders, the policymakers at the level of the institutes and the professional bodies are now beginning to grapple with this. And this is just another manifestation to that, the more recent number. So it kind of tells the story as well. I mean, I was doing some work today. I was looking at I think it was a Fortune 50 or so sustainability report. And they were looking at the physical climate risks to their principal assets, their manufacturing production centers. The value they see in a piece of concrete, a campus, is not to do at all with the value of those physical assets. It's to do with what goes on within those buildings, right? What would happen if they weren't available? And there are a few things in terms of the business model and the operating model that are not touched and affected if the integrity of that asset base, just that one asset type classification of asset, if that at any point is undermined in terms of its integrity or so forth. So that's part of the complexity of leadership and decision making today.